What exactly is a stock? If you're new to trading, this is one of the most important concepts to understand. A stock represents ownership in a company. When you buy a stock, you are buying a small piece of that business. That means you become a shareholder. Even if it's a very tiny piece, it is still real ownership. For example, companies like Apple, Tesla, or Amazon issue stocks. When you buy their stock, you own part of that company. Companies sell stocks to raise money. They use this money to grow, expand, or develop new products. In return, investors get ownership and potential profits. So how do stocks make money? There are two main ways. First, stock price appreciation. If you buy a stock at a lower price and sell it higher, you make a profit. This is what most traders focus on. The second way is dividends. Some companies pay shareholders a portion of their profits. These are called dividends. Not all stocks pay dividends. Many fast-growing companies reinvest profits instead. Stock prices move based on supply and demand. If more people want to buy a stock than sell it, price goes up. If more people want to sell than buy, price goes down. News, earnings, and market sentiment all affect stock prices. As a trader, you are not running the company. You are trading price movement. This is different from long-term investing. Traders focus on short-term price changes. Beginners often think stocks only go up. But stock prices can go down just as fast. That's why risk management is important. Owning a stock does not guarantee profits. It simply gives you exposure to price movement. In later videos, we'll cover how to trade stocks safely. For now, remember this key idea. A stock is ownership in a company. And trading stocks means trading that ownership's price. Keep it simple and keep learning. See you in the next video.